Hi, it's Brian Decker with your Market Minute. I want to talk to you about the Fed and the mantra saying that they are not expecting a recession. Well, how have they done in the past as far as being accurate in their forecasts? They are one of the worst records ever. They have consistently been wrong on GDP growth and interest rate targets and inflation targets. Consistently wrong. So, what if we're going to have a soft landing? That's pretty rare to have for the Fed to guide to a soft landing scenario. It's very difficult. Not blaming them, just saying it's very difficult historically. What if GDP growth is 2% or above, going into where some of the other scenarios are expecting a recession, like the inverted yield curve? Well, 7 out of the 10 last recessions were happening when the GDP growth was over 2% and then it started. What's the trigger? The biggest trigger is inverted yield curve number one. And then whenever the Fed lowers rates the next time, that is the trigger. That starts the recession. So watch for that. And by the way, markets don't like recessions. Here's some dates here for the last 60 years. 1956 to 59, that was a 27% drop. 68, that was 32%. 72, 73, 46%. 80 was 26%, 80 to 82. 1990 was 15%. 2000, 0102 was a 50% drop in the S&P, NASDAQ drop of 70%. 08, 07, 08, that was a 54% drop in the S&P. 2020, that was 35%. So we'll see. We are prepared for it. We have 3 parts of the portfolio. There's cash. Cash is earning right now at Fidelity 4.95%. We have laddered principal guaranteed accounts with MYGAs and fixed indexed accounts. We have IULs, all with the ability to allocate between stocks, bonds, and commodities. And so these can make money in a down market. We're prepared for this. And if the market is going to go down and drop below the 200-day moving average, we have an equity strategy where the defensive team comes on the field. So we are prepared for an up market. We're prepared for a down market, and it's automated which team goes on the field on the equity side, whether we're in an up or down market. And on the fixed indexed annuity side, they allocate on a daily basis. So we're set for whatever happens, but just want to mention that the Fed has been horribly wrong, consistently wrong. So it's Brian Decker. Hope you have a good week.